Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, October 29th, 2019. We are now into a very, very bullish time of the year historically. Last week, historically, was the worst week of the year. Well, we are now in the best 2.5 month period going forward. And this goes back to 1950, these stats. But over the last 68 years, the S&P 500 has finished higher from October 27th close to the January 18th close 56 times, 56 out of 68 years. So breaking out yesterday into all-time record high territory is kind of a big deal, given the historical tailwinds that we tend to see over the next 2 to 3 months. All right, we got a lot to go over today. We're going to go ahead and give you a quick daily market recap, what happened yesterday. Earnings spotlight. I always like to go into earnings. That's a really big part of what I do. And the trading, of course, the market. If you follow the market pretty closely, I think you know that monetary policy and earnings, those two things really are what drive the stock market. So I tend to spend quite a bit of time on earnings. We will look at a number of companies today that reported last night or this morning. Upgrades, downgrades, talk a little bit about October rotation. There's been quite a bit of movement between the various industry groups, and I'm just going to point out some that I think we need to watch. Others maybe that are getting some love here for the last, 2, 3, 4 weeks. I'm not sure that they're doing anything other than bouncing, but we'll get into that. Turning point, where I look at individual stocks getting to key levels, either resistance or support, wondering which way they're going to go. I've got 5 Dow stocks for you today on Turning Point that I want to show you. And then we'll end the show with 3 you must see. These are 3 charts that, for whatever reason, piqued my interest. I think they should pique yours as well. And that is how we will wrap up the show. But first, let's get into the daily market recap yesterday. It was a big day on Wall Street. The S&P 500 closed 3,039. That is the highest level ever. 3,025 was the high previously. We did clear that on the open yesterday, and we held it. You can see the NASDAQ coming up here basically right up against that July all-time high. I was looking for Google with a big earnings report out last night, maybe to be the catalyst for the NASDAQ. It actually, Google came out with a report that the earnings per share came in way below expectations, and the stock's barely down this morning. I think that's a pretty good indication of what we're looking at as we head into the balance of the fourth quarter. Going back over here, you can see the Dow struggling a little bit more on a relative basis. I think some of this relates to some of those Dow stocks I'm going to talk about later in the show. We need to see a little bit more strength across more individual companies. Remember, the Dow is only 30 stocks. So if you've got a handful that aren't performing, that's going to hold back the index. But the Dow, you can see, did finish up about 0.5%. S&P a little more than that. NASDAQ over 1% yesterday. Small caps coming back to life here recently. Really nice move over the past 3-4 weeks. And you can see yesterday rose almost 1%, 0.87%. 10-year Treasury yield continues to move higher. It is down this morning, a couple basis points, but this is no doubt an uptrend. If we can clear 190, that rotation away from Treasuries, which is what sends the yield higher, that rotation would be very bullish for equities. So watch that 190 level. The XLK technology breaking out. This is now at an all-time high. Great to see leadership on a breakout on the S&P 500 coming from technology. It was the best performing sector yesterday, gaining 1.27%. Healthcare up a little bit more than 1%. You can see healthcare now all of a sudden moving to about a 3-month high. This is very encouraging because in a bull market, we want to see wide participation. We want everything rising. Not everything's going to rise faster than the S&P 500, and that's okay. But we do want to see rising sectors, industry groups. And speaking of that, biotechs, which had been in the doldrums for quite a while, this group has woken up here in the month of October. Huge move up. We were down below 1,800 early in October. Now closing yesterday at 1,960. So that was a huge, huge move so far this month. Trying to get 10% on the month, which would be quite a feat. Down on the bottom of the sector leaderboard yesterday is about what I would have expected. Defensive sectors. You've got utilities, real estate, both down more than 1%. That's fine. we're still in uptrends. Like I said, wide participation. These two groups were leading while the market was consolidating. You can see now with the market breaking out, last couple of days have been pretty brutal. I think we could see a little bit more selling in those groups, but I still think the overall trend will remain higher. Okay, let's see. I'm going to get into the 10-year Treasury yield. Let's pull this chart up, get an update. And, when you look at this chart, or at least when I look at it, I see mostly downtrending. We bounced, we came back down. Notice that move to the downside, though, in early October did not take out that prior low. We've now got a higher low in place. So if we can put in a higher high, I think that would start to paint a little bit better picture here for the 10-year Treasury yield. And I think that's really important because, as I said earlier, when you've got the yield rising, it's telling you Treasuries are selling off. And that in turn means there's more money available to go into the stock market. So really important to watch the 10-year Treasury yield and the 2-year as well. I mean, that's the two that a lot of analysts watch in terms of evaluating the yield curve. And some go even shorter term than that to the Treasury bills. And of course, we know that the Fed is now on record. They're going to be buying $60 billion worth of those short-term Treasury bills, $60 billion a month for the next 6 months. So they are working on increasing the spread. And what does that mean? Well, it means that banks are typically going to be favored in that kind of an environment. And if you find a leading bank, and I'm going to pull up JP Morgan here and show you on a relative chart. I mean, this stock has been going straight up, and look at the relative strength. It is a leader in the banks, and you've got the Fed on your side. So I think JP Morgan on any kind of pullback is a viable trade candidate. All right, how about economic reports? We got a couple out today. Of course, the Fed is starting their meeting today, and they will announce tomorrow. I believe, I'm going to go way out on a limb, I think they're going to shock everyone and go 50 basis points. Not because of the economy. Everyone says, wait, no, the economy's not that bad. It's not because of the economy. It's about weakening the dollar to put more strength in the commodity area and bump up inflation, which has now been trailing below the Fed's target. There was already one official last month, I think it was Bullard, one of the voting members, that wanted 50 basis points. I think as that, I don't know, we had a weak manufacturing report. We had weak retail sales. I think there's room economically just to guard against any further weakness. I think the economy is going to pick back up. But I think it makes sense to do 50. I believe just about everyone expects they're going to do 25. I would not be shocked if they do 50, and I think the market would love it. We did have an economic report out just a couple of minutes ago. This is the Case-Shiller home price index, came out for August. It fell 0.2%. The market expecting a 0.1% drop. So a little bit worse than expected. Later this morning, October consumer confidence out at 10 a.m. The market expecting 128.5. September pending home sales also out at 10 a.m. Eastern. And we're looking for a 0.7% increase in September pending home sales. Like I said, Federal Open Market Committee meeting. They will be releasing their statement tomorrow. One other thing with the 10-year Treasury yield I wanted to mention, and this is something I talked about in the Q4 market outlook. Right here, you can see that we have been, you go through these periods of consolidation in here. We went up a little bit there. But when the 10-year Treasury yield is going down, money's going into Treasuries. So that's less money available for equities. So anytime you see the move down, you're generally going to see it much more difficult for the S&P 500 to rise. But when yields are rising, we tend to see more upside. Back at the end of the fourth quarter 2017 into early 2018, one of the biggest moves we've had in the bull market came when we had a big move higher in the 10-year Treasury yield. It kind of goes against maybe common sense because you think, oh, higher interest rates going to be bad for the economy, and therefore you'd think that would lower. But really what happens is when the Treasury market begins anticipating economic strength, that's when they begin selling Treasuries to put their money to work into equities because profits grow when the economy grows. So you want to be more invested in equities. That's why it's very important to always watch this relationship. And one of the reasons why I pointed out that 1.90% level, because this move right here, if it continues, I think it's going to send the S&P 500 much higher. This is one of the catalysts that I'm looking for to take the market higher, quite a bit higher. I think the 10-year Treasury yield is going to move higher. I think we've put in a bottom. All right, let's move on. Earnings spotlight. Well, I tell you what, I'm going to start with, I got to start with Google. Let me go ahead and pull Google up here. And I'll tell you what they're doing in pre-market. You can see the chart. Google was performing really well heading into its earnings report. And when I pull up the relative chart, look at the stock was at about a 7-month relative high to the internet group. So this was actually one of 5 stocks that I looked at over the weekend and thought they're probably going to come up with a pretty good report. Well, they did not. They came in with earnings. I can tell you what they came in with. They came in with earnings $10.12 versus $12.57. But they did beat on their top line, $40.5 billion versus $40.17 billion. But the stock in pre-market action, despite what looks like on surface anyway, a pretty big miss, stock's only down $12 to $12.77. So we're talking about right in here. I mean, it's not even down close to its 20-day. When I saw the report, I thought immediately, okay, we're gonna probably gap down and open around the 20-day, which is at 1240. And we did go down about that far early in after hours last night, and then the stock started to recover. I find it very bullish that a company can have a report that misses by that much on the bottom line, and the stock being down less than 1%, especially a visible name like Google. But I think that again speaks to a market that wants to go higher. Other stocks out with earnings. Let's go over. I'm going to give you some of the ones that I think looked really good first. So NXPI. NXPI came out with revenues $2.27 billion. Market expecting $2.24 billion. Their bottom line was just off the charts. 242 versus 193. So pretty nice beat there. And then the stock in pre-market right now up nearly 5%. It's up to 114, which is up $5.35. That is going to be a breakout of this sideways consolidation. I think that's very bullish. We are seeing a lot of bullish reports out of the semis, and I'm going to give you another one right here. And this is one also that I had mentioned over the weekend, AMKR. You can see the huge move up here heading into earnings, big volume increasing. Look at the relative strength over the past 3 months. It has been awesome for AMKR. And in pre-market, the stock is currently up 17%, trading at $13.04. Now, because a lot has already been built in, this stock was trading back at $9 at the beginning of October. If I held this into earnings, I would be selling at the open, taking my money and seeing if you get a pullback, because it could be buy on rumor, sell on the news. So we might get a gap up and then see some selling today, or it could just take off like the rest of the semis have been doing. But point is, great report. They came in with their earnings. Let's see. Revenues $1.08 billion. The market was looking for $1.03 billion. So an easy beat on the top line. Bottom line, 23 cents. Market only expecting 7. So that was a really big surprise to the upside. And I will continue to make the case that if you're holding stocks in the earnings, check out their relative strength, how they're doing versus their peers, how they're doing versus the S&P 500, maybe to a little bit lesser extent, how their group is doing versus the S&P 500. And if they're strong, Wall Street's expecting a good report. And so definitely got one here with AMKR. All right, a couple of others. Let's see. Got to go with Merck. Merck came out with a really nice report. They were down near recent support level around this 81 level. They came out with a great report, though. This is one of the better reports out so far in earnings season. Revenues $12.4 billion. Market looking for $11.6 billion. I mean, it wasn't even close. Bottom line, $1.51 versus $1.25. And then they guided fiscal year 19 revenues and earnings per share higher. So that was really the trifecta for Merck. I think that report looked awesome. The reaction so far, stock up 2.25%. I would have expected more, to be honest, 84.05. So it may reclaim that 50-day moving average, which is at 84.01. I really want to see this breakout up here. Healthcare starting to strengthen, so I think that's a good thing. Pharmas, not so much. Pharmas have really struggled. You can see down here near a 52-week low. So problem isn't Merck. It's really the murky pharma group. So anyway, Merck looked good. Pfizer also came out with a nice report. I didn't like their chart nearly as much as Merck, though. You can see Pfizer's been going down. Pfizer in pre-market action right now is up 2.8% to 38.31. So it does look like it's going to clear this prior high, at least on the open. But it's going to have major gap resistance to try to get through if it can get up to about 39.5. So for that reason, I'd probably be more interested in Merck. Just too many technical hurdles ahead for Pfizer. Pfizer's numbers, though, came out really strong. $12.68 billion in revenue versus $12.37. Bottom line, 75 cents versus 63 cents. And like Merck, they guided their fiscal year 19 revenues and earnings per share higher. So pretty good action there. Let's see. Shoe was another one that just came in this morning with some pretty good numbers. Shoe reported revenues of $497.3 million. Market only expecting $487.2 million. Bottom line, 67 cents versus 59. And they guided their fiscal year 19 earnings per share higher. Shoe in pre-market action currently up 7.3%. to 38.50. It is going to be a breakout on Stephen Madden to start the day. And when you look down here, footwear has been pulling back. This could be a lift to the group. Footwear overall had been very strong relative to the S&P. Just literally a week ago, it was at a 52-week high. Got a big pullback, but I think we may be turning back to the upside. Today will be pretty interesting given that strong report from Stephen Madden. Let's see. I'll just tell you a couple of others that reported I thought were pretty strong. We'll pull the chart up, just look at them real quick. I won't give you the numbers, but MLM, Martin Marietta, very strong report. LDOS, this is Leidos Holdings, another strong report, needs to get back above that 20-day and start trending higher. And NEO, Genomics, also coming in with a strong report, was gapping up earlier. See whether or not we can get that through and hold that 50-day moving average. To the downside, got to give you a couple of these names. Beyond Meat. The stock, when you look at the numbers, didn't look that bad. Revenues, $91.96 million. Market expecting $83.35. Big beat there. 6 cents versus 5 cents bottom line. And then they guided their fiscal year 19 revenues higher. So you look at that, and if you were holding and you just saw that headline, you'd think, wow, this should be pretty good. Stock down 21% in pre-market. It is down to 83.46. I think it's heading all the way back down to test this, the IPO, the move up after the IPO, maybe to the upper 40s. I would not be surprised. It's just downtrending. You want to pay attention to what the market is saying, not what you want stock to do. And right now, with this stock trending down below the 20-day, way below the 20-day, we might get a little red hollow candle and bounce back. But I think further down the road, we probably have a little bit more pain in Beyond Meat. A couple of others I'll just give you that are also struggling this morning after reporting numbers that the market didn't really care for. Shopify, SHOP, getting hit hard. Grub, oh my gosh, Grubhub is really getting beaten down. And Crane, CR. Those are a couple of names with earnings not faring so well. Upgrades today. I'll give you a couple of upgrades and downgrades here quickly. CTXS. This is Citrix Systems. They were upgraded. Stock was up a little bit in pre-market. This one's gone straight up. I don't know. This might be one of those that we gap up and then come back down. I like it at the 20-day moving average, though. OC, this is Owens Corning. Upgraded today. Has been in a nice uptrend. A move and close above 65 would be bullish there. Texas Roadhouse, been in a downtrend. Got upgraded today, though. Look to see if it can get back through that 50-day moving average. Downgrades, not going to pull the chart up, just did, but Grubhub, 5 downgrades today. on their earnings report. Not good. AMCX, this is AMC Networks, downgraded. Stock's been in a downtrend for a while. Not good there. And then one other, MCY, which is Mercury General. Not a really heavily traded stock, but I saw that big move down yesterday. Now they get the downgrade. Not good. Not good at all. And honestly, when you see a stock like this that's been down, moving down, the overall group has been moving up. You've got a stock that's down close to its 52-week low going into yesterday. This, again, is not the kind of stock, and I don't know if this was earnings related. I'm assuming it was, but it's not the kind of stock I would want to hold into earnings, not when it's down near its 52-week low. Wall Street is placing its bets, and it's certainly not betting on this company. They've had analysts out talking to them, so you have to understand what the message is that Wall Street's sending. It's not a foolproof system, but certainly I think it's better than 50-50. Follow relative strength. Speaking of relative strength, let's get into October rotation. And what I'm going to do here is I want to show you, I'm going to go into, this is one of the groups actually, recreational products, looks pretty good. But I'm going to start with the relative strength industries that I like to use. And I'm going to go into this view all. And over here, click on summary. And I'm going to go back here and just, if I want to know what's been going on in October, why not just look at a 1 month? Because this tells me relative to the S&P 500, which groups are doing best. So you can see right on top, tires. So do I want to run out and buy Cooper Tire or Goodyear? No, I really don't. Yeah, we've had a really nice couple months to the upside. This is a group that was beaten down so badly. Look at the absolute chart. I mean, we've got the S&P 500 breaking out to an all-time high. This has been downtrending for 2 years, 2.5 years. Should I get excited because it's up for 2 months and the relative strength's up for 2 months? This one's got a lot of work to do. It could be that the bottom is in and we're going to just shoot up for the next 2 years. I think it needs to show me some more. I'm not particularly interested here just yet. But recreational products, the second best. Now, this one looks a little different to me, and I'll tell you why. First of all, we've broken above on a relative basis any point where we had been in 2019. Also down here, look at the absolute chart. We made the breakout above April highs. So not only are we breaking out on an absolute basis, but we're starting to lead the market to the upside. First time in, probably 18 months, the relative PPO, relative momentum, has moved positive above zero. These are the types of things that I think give me a little bit more comfort that this isn't just a temporary thing. Now, we could have one pullback here, maybe test that 20-day, and I think at that point, some of these recreational products companies might be very interesting, might be able to get in with some excellent reward to risk ratios. So pay attention to that. Let's see. One that I wanted to talk about a little bit is this commercial vehicles, because this one I think is definitely beginning to make a move. If you noticed when it made a move back in, in April, when it broke out above this prior high, see, it never took out that prior absolute high, never took out relative highs from before. Now what we're seeing is absolute move to the upside, higher low, higher high. Look at what's happening on a relative basis. Higher high, higher low, higher high. So, and we're getting ready to turn across zero. So I think commercial vehicles and trucks is a group to pay close attention to. A number of stocks that we certainly could watch, and I'm going to give you one when we go over the three you must see. But let's move on to Turning Point, and I just want to give you 5 quick stocks that are worth noting on the Dow, because if the Dow is going to get going, I think these 5 are 5 to watch. American Express broke above the 20, sideways consolidating. This has been an underperformer. Can it break back above 120? I think this is going to be a really important level to see whether or not American Express can begin to add to the Dow's gains. All right, Caterpillar. I'm going to stretch this out a little bit. If we go back a couple of years on Caterpillar, I think you're going to see there are a lot of tops coming in here to this 140 level, just below and just above, and that's where we are. If the Dow wants to get going, a breakout on Caterpillar certainly would help. How about Cisco on this long-term chart? Been downtrending. It's been trying to hold on to 46 support. Can it hold it? If it can't, that's going to be a little bit of a drag on the Dow. Disney, DIS, also downtrending. After this big move up on earnings back in April, the reaction low came down to about 128. We have been holding this 128 level. We've got some support, gap support right in the mid 120s as well. Disney needs to continue to hold this level. And then finally, Johnson & Johnson, J&J. If you go back, look, 126 has been key. We've tried to break out, couldn't handle it, came back down. Can we hold 126? These are 5 stocks, I think, that are at turning points, all on the Dow Jones, and I think are going to cumulatively affect the future of the Dow. If these 5 can get going, I think the Dow can break out to an all-time high, or at least if a few of them can get going. But if they continue to weaken, it's going to be hard for the Dow to get going. That's 5 of the 30 components. All right, let's move on to 3 you must see. And the first 2 are going to be 2 more Dow components. I'm going to start with Goldman Sachs. Goldman Sachs has been going sideways here, and we know the financials have started to pick up a little bit. I'm going to show you a relative chart here. Here is the investment services group, been trending higher. Goldman Sachs, relative to its group, has been trending higher, trying to make a breakout to a 11.5-month relative high. It's not far away. So if we can get this breakout up here at about 222 on Goldman Sachs, I think that would be a very, very big level. So I'm going to annotate this one. Just mark that level right there. And then come down here and look at this relative strength. We are getting close on both of these numbers. And if we could get breakouts, I think Goldman Sachs could really run in the latter part of the fourth quarter. So keep that in mind. All right, so let's go ahead and save that. All right, next up, Nike. Nike's actually an alert that we have out at Earnings Beats right now. I really like the stock. I don't know if Stephen Madden Shoe is going to light a fire under these footwear stocks, but it was just about a week ago. Nike, well, footwear was up at a high, and on a relative basis, Nike had broken out to a 52-week high relative to the S&P 500. Now, we did see some volume coming in on the selling, but in my opinion, we haven't lost any major support levels. So I think that as long as we continue to hold, I think the 90 level, and if you want to go all the way down, I think that gap support at 87 is going to be critical. I think that's maybe 87.18, just above 87. But anyway, that is a support area. The stock was up over 96, maybe close to 97 a week ago, a little over a week ago. Now it's back down challenging a key support level. I definitely think this is one that we want to keep in mind and watch. So this would be the second one. And next up is the number 1 chart of the 3 you must see. And this is in that commercial vehicles area, Cummins. Now, the stock looks good. Broke out. I can tell you that they reported. The market didn't like what they saw, and the stock is down in pre-market right now. It is down. Trying to see. Here it is, down $6 to 174. I think we could get a red hollow candle. Watch off of this 20-day moving average. This is going to be a stock absolutely that we want to pay attention to. All right, that is it for the 3 you must see, and that's it for the show. I want to wish everybody a great day. Thank you so much for joining me today. Remember to tune in here on Trading Places Live, StockCharts TV, every Tuesday and Thursday from 9 to 9:30. Have a great day, everybody. Happy trading.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.